Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Brian Bride, Director of Payroll Operations. Brian, how's it going in payroll land?
Going pretty great. End of quarter, doing the filings gets really busy. So it's exciting though.
Is it exciting?
Yeah, I like doing it.
I gotta keep reminding myself this guy loves payroll. He really does. When is payroll not so crazy? Is there a time of year where you're like
May?
Yeah.
May's the deadest time, I think, in my experience.
It's just nothing's happening.
A lot of people are starting to go on vacation. Yeah. Your first quarter ones are done. You know, if there was a mistake already, it's been fixed in April. People are getting out of school. People are starting to take vacations. It's just that May is like this kind of slow month, and then it picks up for because a lot of people are fiscal year July 1st. Mm-hmm. So June, it starts picking up again. Like, hey, are they going to switch? Mm-hmm. They might be investigating, doing their due diligence if this is a good fit or not. So yeah, I mean, May is like my month where I can relax. The rest of the time there's always something to do.
I was about to ask, are you going to have a vacation in this
Me?
May?
I don't know. It's probably a staycation. Big staycation guy.
Well, let's get into something that you do have to worry about more or less all year, right? Mm-hmm. This is a workers' comp audit. So, first off, who initiates the workers' comp audit?
So that's done by the workers' comp insurance company. So when you get a policy, they say, all right, there's two ways to go about paying for your workers' comp. There's one version called pay as you go, which is very common with construction companies because they have job costing, right? They don't want to be like, oh, I'm going to randomly assign this many hours. They don't know how much it's going to be. Depends on how long the job takes, what they bid out to, things like that. So that's a really good cost control for them. Restaurants is another one because they have a lot of turnover in staff and they're not sure how many hours they're going to be paying each time. Mm-hmm. So that's also one that we've had a lot of people go to pay as you go on workers' comp.
So basically anything that fluctuates.
Yes.
It's not something that is easily measured. Yeah.
Right. So also, a big thing for like food costs in restaurants are very small margins. So you saving a couple bucks can really make the difference. The other version is like the one that you just pay for the year with estimated wages. That one's very common. That's like 90% of them. If maybe you have an office of salary workers, you're just going to do this with the standard clerical code and be done.
Also because that's not very a dangerous environment, right? As opposed to like a construction site or even a restaurant, there's ways people can get hurt.
Right. Yeah, absolutely. And then construction too, it's varied, right? Maybe a plumbers, they have a different rate than, somebody driving a truck, right? Mm-hmm. Whichever's more safe. So knowing like, hey, I'm paying this many hours to people. I don't know how much I need in plumbing, but that's a dangerous and higher code. I might want to pay every single time to make sure I'm bidding right on my costs. Yeah. So same thing in restaurants, cook's a different thing than a server. So, so the estimated wages would be you're in an office environment and they're like, all right, well, we have 4 people and they make $50,000 a year. So it's going to be $200,000. We charge you a percent or whatever. And then $200, do you want to pay now or do you want to divide it up? So you do that and you start your policy. So let's say you start your policy November 1st. Then when next October comes around and it's time to renew, you have to do a true up with the estimated wages. So they come to you and they say, hey, we're doing an audit. What that means is I need your payroll registers and your 941s from the past year to determine how much you actually paid in wages. And, is there an overage? Do you owe us money? Did you hire an extra person and not tell us? And now the amounts up, or was there a bunch of overtime paid? What have you, in order to make sure that the wages and the risk is correct.
Now, do these numbers change and fluctuate with the amount of incidents that occur?
Right. So your rate could.
Your rate does, but I want to go back to construction sites. You're working on a job. Can that change mid-job, or is you kind of locked in already for that?
You're locked in during the year, but then that's part of the audit. So part of the audit is how many claims do you have? Oh, you paid $10,000 in hours and you had like 4,000 hours in claims, missed work, like it's dangerous. We need to raise your rate,
So what flags this audit? Is there a specific event or?
Nope. It's a standard procedure when your policy comes up.
Okay.
So if it's pay as you go, there's no audit really because you're paying it every
paying this
what's owed,
this event. Okay.
Yep. And then if it's you're an office environment, then it's every year when you shop around for workers' comp policy, they're going to ask you what it was last time to make sure you're right.
Okay. What's something people really don't know about these audits that you're like, I wish everyone knew this?
Yeah. So overtime is a big deal. And so your wages are based on your straight regular hourly pay. So if you have a job with a lot of overtime, let's say somebody works, 40 hours of overtime every 2 weeks, right? You're not paying on 150% of their wages. You're just paying on the hour straight. So if they work 60 hours a week, it's 60 times the regular hour rate for wages paid, not 40 times plus the 1.5 for the overtime. And this is where, when I just give you a payroll register, it's not going to really work for you because you have to do math and back things out. And then they compare it to your 941s to make sure it's accurate, but there's deductions and things that don't match the 941. So the best solution is to have a workers' comp report. And you can set that up pretty easily in most payroll systems. iSolve is super easy. When you start with us, you send us your workers' comp codes, who's attached to what code. We set it up in the system. And then when there's audit time, you run your workers' comp summary for the year, give them the information, and you're done. They can do what they do with it.
So realistically, this is not something that's too complicated. It just needs to get set up correctly, and then you run with it.
Correct. So yeah, making sure that the employees, come in with the right codes and the right jobs, that kind of data integrity is like the biggest challenge, which isn't that big of a challenge. But yeah, if you set it up to record every payroll, and then you're able to generate the report based on the wages worked and the hours worked, you save yourself a lot of time. You save the workers' comp company a lot of time where they're not asking you questions back and forth. What about this person? What about that person? So it's really great to automate it and make sure that it's got the right data for you.
Now, my favorite question that I love to ask you, Brian, is what's the penalties for not doing this?
Yeah. So, you need workers' comp, right? So if you don't have workers' comp and somebody files a claim, they find out you don't have workers' comp, you're in big trouble with the state and Department of Labor. You probably lose a license. A lot of times you have to verify, if you're a contractor, you have to say, hey, I have this kind of policy. This just all depends on the industry you're in and the state. It can vary widely, but yeah, workers' comp is one of those things that when you start a new business or start with a new payroll company, they might not ask you about right away, but it's something that you need to have. And it's really, really important. So it's something that we try to ask on the calls to be like, hey, who's doing your workers' comp policy? Is it pay as you go? Is it estimated wages? And then trying to get that set up from the get-go.
Perfect. Thank you very much, Brian.
Thank you.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.